Hi, Jeff Anclam with Waterstone Mortgage with your Waterstone Weekly Update. Today, we're going to review some updates on the Fed's mortgage-backed security program, the potential extension of the $8,000 tax credit, and the extension of FHA loan limits. First, an update on the Fed's mortgage-backed security program. So far, there have been $977 billion purchased out of the $1.25 trillion allotted. That leaves $273 billion to be purchased over the program's remaining 22 weeks. That's an average of about $12.4 billion in purchases each week, much less than the $20 to $25 billion that the Fed has been buying weekly since the program began and before rationing started. It's obvious that rates will trend higher as the reduced Fed buying program continues. As stated earlier, this trend higher will not be in a straight line. This is one reason for your buyers to take advantage of rates now, regardless of any extension of the tax credit. Speaking of the tax credit, as I'm sure you're aware, the Senate reached an agreement to extend the $8,000 tax credit for first-time home buyers. They also added a $6,500 tax credit for other primary home purchasers, meaning not just limited to first-time home buyers. They also raised the qualifying income limits in a very meaningful way. Singles were increased from $75,000 in income to $125,000, and joint taxpayers from $150,000 in income to $250,000. Buyers must have executed purchase contracts in hand by April 30th and then have until June 30th to actually close. More details are to come, and changes could still be made as reconciliation and voting, which will likely be this week, takes place. In some good news, the House and Senate voted last Friday, to extend current higher loan limits for FHA, Fannie, and Freddie mortgages for 1 year. In our area, this is $271,050 for FHA and $417,000 for Fannie Mae and Freddie Mac mortgages. There are no Treasury auctions this week to potentially impact mortgage rates, but there is the Fed meeting today and monetary policy statement due out as well. While no one expects the federal funds rate to be increased, any indication of inflation concerns could mean increased mortgage rates. Also, the jobs report comes out on Friday. Economists are expecting to see it rise above to 9.9%, but Mortgage Market Guide sees it actually rising above 10%. If it does, the topic will get a lot of attention. In conclusion, rates continue to be in the low fives on 30-year fixed products. I believe rates will trend higher in the long run, so there's no time like the present for buyers to take advantage and get in on the current opportunity to purchase a home. Like last month, Waterstone Mortgage will not allow any refinance closings the last week of November to support the heavy volume for purchase closings. If you have a buyer on the fence, are looking for last-minute support, or if you have any questions on these topics, please give me a call at 750-5001. If you would like to see this information in written format, you can do so on my blog at foxvalleymortgagepro.com. This is Jeff Anclam with Waterstone Mortgage. We'll get your buyer home.